Good day. Today I'm going to speak about assessing the useful life of PPE assets and to account for the change in useful life assessment. As per IFRS for SME, an entity shall allocate the depreciable amount of an asset on a systematic basis over its useful life. Useful life is defined in IAS 16 as the period over which an asset is expected to be available for use by an entity, or the number of production or similar units expected to be obtained from the asset by an entity. In other words, the useful life of the asset is the period over which you are expecting to get use from the asset. If you estimate that you will be able to use a machine for 5 years in the production process, then the useful life is 5 years. There are numerous factors that should be considered when determining the useful life of an asset, and consequently that will have an effect on the subsequent evaluation of the useful life of an asset. Factors such as the expected usage of the asset, expected physical wear and tear, industry or technological factors. Maybe this item will need to be replaced frequently due to technological or industry changes. The list is endless. However, at any time these factors can change and will have an effect on the useful life of the asset. And the useful life will then also need to be reassessed. When management reassesses the useful life of assets, this will be accounted for as a change in accounting estimates. For example, management now see that they will be able to use the machine for 2 years longer in the production process than they originally anticipated. Or perhaps the physical wear and tear on this machine is a lot, and they will now only be able to use it for another 2 years, which is shorter than the original useful life assessed. As per IFRS for SME, a change in accounting estimate is an adjustment of the carrying amount of an asset or a liability, or the amount of the periodic consumption of an asset that results from the assessment of the present status of and expected future benefits and obligations associated with assets and liabilities. Changes in accounting estimates result from new information or new developments, and accordingly are not correction of errors. An entity shall recognize the effect of an accounting estimate prospectively by including it in profit or loss in the period of change if the change affects the period only, or the period of change and future periods if the change affects both. To the extent that a change in accounting estimate gives rise to changes in assets and liabilities or relates to an item of equity, the entity shall recognize it by adjusting the carrying amount of the related asset, liability, or equity item in the period of change. For example, management decided to evaluate the useful life of all PPE. All useful lives stayed the same except for machinery. The remaining useful life of machinery was established to be 2 years at their financial year end of 30 June 2021. The original useful life was 5 years on the straight line method. As at 30 June 2021, the carrying value was as follows. There was a cost price of 200,000 Rand, accumulated depreciation of 80,000 Rand, and a carrying value of 120,000 Rand. The current year depreciation, as per the old useful life, has already been taken into account. Our calculation will be as follows. Depreciation as per our old useful life will be 200,000 Rand divided by 5 years is 40,000 Rand per year. The depreciation as per the new useful life is 160,000 Rand divided by the 3 remaining years, which is 53,333. Remember that we are calculating the new useful life from the beginning of this financial year. IFRS for SME says that an entity shall disclose the nature of any change in accounting estimates and the effect of the change on assets, liabilities, income and expenses for the current period. If it is practical for the entity to estimate the effect of the change in one or more future periods, the entity shall disclose those estimates. For example, we will have a note in our financial statement, change in estimate. The useful life of machinery was estimated in the 2019 financial year to be 5 years. In the current period, management has revised their estimates and concluded that it only has a remaining useful life of 2 years. The effect of the revision has increased the depreciation charges for the current and future periods by 13,333. The tax impact on this is 3,733 Rand. Please contact PKF VGA should you have any further questions.